Okay, so that's the final lap of your special edition of Business Morning. This Tuesday, the 12th of February, the day of the fourth quarter GDP and full year 2018 numbers. The financial and insurance sector contracted by 1.76% in the fourth quarter of last year, down from 4.81%, also negative in the third quarter, still in negative territory, or slightly better, even though still in the red. That was against 0.22% positive reading in the fourth quarter of 2017. So Nigeria's financial services sector is still in the water. As it were, the insurance sector grew 1.23% from 1.03% Q3 versus Q4. That means the insurance sector is still trying to keep its head above water. But let's take a bit of this to the marketplace, and that's what we have. Let's talk to Ajibola Ero Phillips, who is the head of FX trading at FBN Quest Merchant Bank. He's live to us from the FMDQ exchange place in downtown Lagos. Let's check it with the debt market. Ajibola, good morning. This is your GDP day. What's the reading from the debt market as we open today's trading?
Good morning, Boasin. From the debt market, market was slightly quiet.
Yeah, the market is quiet. Or why is it quiet? Yes. What makes the debt market quiet early today, of course? Okay, I guess we lost Ajibola there a little bit due to some technical hitches. Of course, we're checking with the stock market, where Temple Ashaju is also standing by to take us the first call into the equities market today. We did nearly 1% yesterday, a little bit of trajectory on where we came from last week, when the market roared nearly 3% for the first full largest gains in the month of February. February to date, we've done about 4% in the green territory. Temple, I'm sure the market still not yet fully digest the GDP numbers, but give us the first call on the equity side.
It looks like we're saying the market's already digesting the GDP numbers right now, because again, we don't forget, we've also had the interest of the foreign investors renewed in the past few sessions, and of course that has been pushing the numbers upwards. But if you compare the kind of early trading activities we've seen this morning to what we've been seeing in the past 5 to 7 sessions, I mean, what we've seen this morning is really, really higher. In early trades, we've done some 1.10%. And that's really high. And we've seen interest, maintained across the banking sector and, of course, the consumer goods sectors. You know that the banking names were the key segment of the market that a lot of investors and traders have been paying attention to in the past few sessions. Access Bank has been rising. You've got Zenith Bank also rising. FBN Holdings today is done the highest so far, 9.2% in share price. And of course, if you look at the consumer good names, if you look at the likes of Nestle, Dangote Flour, they've all been rising. Unilever is also on trajectory at this point in time. And we haven't even seen any kind of profit taking on that, on all of these major counters. So for me, I think the market is already digesting those numbers. If you look at the fact that the non-oil sector also contributed some 92.9% to the real GDP numbers at this point in time, a lot of investors will continue to look at some of the names in the market that reflect the kind of posture that the non-oil sector has in the markets here. So that's what we're saying so far by way of sentiments in the market, Bosun.
All right, Temple, thank you so much for bringing us the market. The first word from the market on this GDP, of course, our panel is still here. Two members will rejig a little bit. Taiwo from Deloitte, Nigeria, and Robert from Afrinvest. Gentlemen, let's take this to the market. Let's start with you, Robert. How do you take this to the market, both equities and the data? Of course, this is a look back data. But this is very disappointing for financial institutions, showing we're still in the water when it comes to GDP. What's happening in our financial, what's happening on Broad Street?
So again, what we saw, like you said, is disappointing. We are not happy about it. The sector, financial service sector, comprising of banking and insurance. So again, we've slipped into another recession. By the time this because we are talking about 2 consecutive quarters of decline. And again, it's not far-fetched. I mean, I go back to analyzing, what the GDP numbers should portend when it is released. It's about real economic activities that are taking place. You think about it from the bank's perspective, we saw a lot of them having issues with non-performing loans. We're seeing that in terms of, if you want to measure activities within the banking sector, you're seeing it in terms of the real business of intermediation that they are carrying out. through creating loans, for example. You're seeing a situation where most of the banks have a sort of flattish growth in terms of loan book, and you're seeing a situation where this is not really translating into funding, real business.
So whatever happens on Saturday, we need to grow the financial services sector.
Absolutely.
And I'm sure Taiwo can relate to that.
Yeah, this is the sector that we actually need to catalyze the real sector of the economy, because it should be that it should do that job of intermediating.
Taiwo, what do you think? 1 minute.
I actually think what banks and the financial service sector in general, has to do is to open themselves up, especially when it comes to risk taking. I don't think the financial service sector takes enough risk, especially when it comes to giving out loans and the general intermediation role in general. So I actually think, when you expand, especially when you look at the loan books of bank at the moment and you compare it to what it was in 2017, it hasn't really changed significantly. So if you have something like that, there is a tendency that the non-performing loan will increase, but the loan books will still remain the same. So there is a possibility that when you look at the net, the bank will be in a loss position. So that's why
there's a problem with loans taken by folks. Okay, thank you, Taiwo. Just a second, let's spend just about 60 seconds to touch in with Ajibola Aero-Phillips, who's the head of FX trading at FMDQ Exchange Place. Ajibola, just in 1 minute or less than that, bring us up to speed. What's the outlook on today's trading at the debt market?
We expect the market should be relatively quiet, although we still expecting a bit of demand. The FPIs have been a bit aggressive in their demand, but that has slowed down in the last 1 week or thereabout. So we're expecting that there will still be some buying interest, but not as aggressive that we've seen. Also, the PMA auction for T-bills is scheduled to hold tomorrow, and also there's also another auction that's scheduled to hold for bonds. We expect that yield will slightly drop because there's been a bit of a strong demand.
Thank you.
From FBN especially.
Okay, thank you so much, Ajibola Aero-Phillips of FBN Quest Merchant Bank. Temple Ashaju, let's wrap it up with you in a few 30 seconds. Is there any other news making the headlines this morning within the first hour of the opening bell?
Nothing really new except for the GDP numbers that a lot of the traders here are still trying to digest to see how it will help to shape their decision, their investment decision in the market. I saw earlier a lot of traders, talking to some clients and trying to see how they can galvanize them to come to the market more. I mean, to take advantage of this level of gains that we're seeing in the market. The consumer goods segment and, of course, the banking names are still the key sectors to watch here in the market. If you look at some companies like Access Bank, which in the past 7 sessions has gained some 25%, it remains a segment to watch because, again, the M&A with Diamond Bank is yet to be consummated. If you look at the likes of Dangote Flour, in the past few sessions too, has gained some huge percentage point, 18% up until Friday. And if you look at what it gained yesterday, it's still on a trajectory. It's now trading at its highest level, the levels we saw it last in March 2018. And so a lot of investors, traders will continue to look at these segments of the market. Before you know it, the all-share index will cross some 33,000 psychological line the way we're going now.
All right, thank you. Let's do everything that happens. Let's take it very nice and slow before Saturday and thereafter. Thank you, Channel Television business correspondent live to us at the Nigerian Stock Exchange. Thank you, gentlemen. Taiwo, thank you very much for coming. Partner at Tax Services at Deloitte Nigeria, and Robert Omonso, the head of research at AfroInvest. Thank you very much. I have more of the digestion of the GDP, and then we'll talk in the days ahead. And that's your package for today. Your special edition of Business Morning, live here on Channel Television, but where news comes first. That's at the top of the hour. See you again tomorrow.